Hello, my alpha addicts. Welcome back. It is Wednesday, and literally Uptober is taking shape. We're going to share a whole bunch of charts and data to prove that. So let's jump in and talk about some new all-time highs as well, and massive flows, a little bit of scary macro, and so much more. Thank you all for coming. Thank you, Sean Donnelly, as well, for being here, and K8 in the chat. So let's jump in. Let me see. Yes, haha, the button's working. And this is not financial advice as well. And shout out to Patreon who make this possible every single day. This is from Martinook777. He says, loads of info published on Patreon that's not included in YouTube videos. I've been paying £10 a month for 6 months, and it made me so much money following info and data provided by James Analysis, especially on Tesla, Baba, and the obvious MicroStrategy. Thank you so much, buddy, Martinook, for being here. Yeah, appreciate you. And let's talk about fear and greed real fast. And by the way, I just want to, before I forget, the shout out behind the team that make all this possible. I'm putting this stuff together as well. I don't see these things till I'm actually standing here. So let's go. Fear and greed, up to 73. Now 73. Yesterday, 65. We are spiking up last week, 49. And we were terrified a couple of weeks ago at 39. That's where we are. I want to spend a minute. I'm going to show a bunch of charts I used to show with great regularity, but things have been quiet. So I haven't showed them, but now I'm breaking them out again. First of all, Bitcoin monthly returns. We are now up 8%. 8 is a lucky number in some cultures. 7.5% in September. September is normally rocky, and it was up. And remember, all of the action happens in the latter half of October. Today is the first day of the latter half. It's October 16th. So we'll get to that in a minute with a cool chart. But here, if we look at the average returns for all these different months, average return for Bitcoin in October is 14.7%, which means if history repeats, we have more room to go. But November is when things really kick off. Average returns 41.7%. Again, we did it that crazy 2013 year, so probably wouldn't be that high. But anyway, not bad. And December, 9.6%. All mostly positive on average. But we have things that are happening this time around that we never had before. ETFs are a big part of that. We'll show you some crazy numbers that'll melt your face in a minute. Let's get into the news first. Yesterday, I did talk about this because it took the internet by storm. Larry Fink was talking about kind of housing market and the size of Bitcoin. There was some confusion around, is it a $50 trillion market, which is the US housing market, that would bring Bitcoin to 3.25 million? No, that's not what he meant. It looks like now he was talking about the $11 trillion housing mortgage market. Mortgage market, 11 trillion. So take a fifth of 3.125 million. It's still a big target, and that's what Larry has in mind. I did mention this yesterday. Again, sometimes people say things on TV that can be misconstrued, but again, it does cause a lot of excitement with the Finkster saying our Bitcoin bag is going to $3 million a coin. But remember, no time frame was mentioned, and time is everything because we know fiat is going to zero. Therefore, Bitcoin is going up. It's inevitable. And that's just the way things work. Thank you, The Great Escape, for coming. Also, what also rattled the market yesterday is Elon Musk and Tesla. They moved their Bitcoin bags. And the question is not why. Well, it is kind of why, but what are the reasons that could be behind this? You know, could it be XAI payments? I'm not sure. Could it be for security? I believe there's a 60% chance they are moving to new wallets for security. I believe there's a 20% chance they could be preparing to sell some. I believe there is a 10% chance they could be interested in buying more Bitcoin with some of the excess cash that they have. But remember, they're growing very fast and require huge investments in AI and robotics, etc. And the fourth option is maybe they're preparing to accept Bitcoin as payments again. We're not sure. But they did accept Bitcoin as payments for vehicles in 2021 before holding the practice. And that was a clever move. You don't want to sell something for Bitcoin at the end of a bull run. So they're pretty good on timing that stuff. Also, I mentioned in yesterday's Okta, volatility is returning. And today, Bloomberg published the fact that they do see this too. And so did K33 Research. They are seeing now how Basically, volatility closely mirrors the price action and market structure from 1 year ago when CME activity accelerated halfway through mid-October. You cannot make this stuff up. That's why we look at the history. Again, I repeat those two things. One, CME activity accelerated midway through October, and futures premiums have rallied to 5-month highs in CME. And this is indicative of significant demand by institutions looking to add additional exposure. We'll touch on more about that with the chart in a second. And before we wrap up the news and get into the charts, Italy is going the wrong way and the rich will leave. Just in, Italy is looking to raise capital gain tax on Bitcoin from 26% to 42%. You know what people will do when that happens? They'll say, bye-bye, and they'll move. Again, you tax people with bags to death. They have the money to pay for wings and they leave. So draconian governments, don't be silly. Don't be a nonce. Anyway, much respect to Italy. But let's get into the charts. That's why you're all here. Okay, first of all, a lot of exciting stuff. Black segment. I always try and balance out bad news, ugly news with good news. So we'll get into the black first of all. A lot of talk about debt, deficits, spending. And this is from Digital D, who made this chart. And it's a visual overview of the current and previous administrations and how they spend. Obama, $9.3 trillion. Trump, $7.8 trillion. Harris, $8.4 trillion so far. And they are accelerating. It's going to be over $9 trillion, I reckon, over the next couple of weeks at this rate. The point is, they all spend. And the point is, debt is going to 45 trillion unless there is an extreme version of DOGE. All right. So look that up. It's not the coin. It's something else. That's what's required. Absolute ruthlessness. Get rid of all these stupid departments that are just wasting money. The government should not be allowed to spend a penny unless they can generate more than a penny in return. Okay? Like anybody else. If you can't generate return on investment, do not spend the money. It's that simple. Next, deficits are now higher than the global financial crisis. And just to put this in perspective, global debt is heading to $100 trillion, and that will soon after that be 100% of global GDP. The world is built on debt, and it is a house of cards. This is from Octavio Costa, and this chart puts everything into perspective without even factoring in the cost of servicing debt. And remember, this is all tied to Bitcoin, of course. But the fiscal spending alone represents over 25% of GDP in the US today and other countries around the world. Today's government expenditure has already surpassed the levels we've seen after the global financial crisis. And we are not in a financial crisis. And we're spending like we are, which is bizarre. Very bizarre. And apart from the C19 stuff that you see in the big spike there, we have not witnessed such stupid spending since World War II. So this lack of fiscal discipline is likely to persist. And of course, it is the predominant driver of inflation. That's all she wrote, ladies and gentlemen. This is why we get into hard assets. This is why we Bitcoin. This and this. It's bonkers. Absolutely bonkers. Now, that was the ugly charts. Now we got lots of good ones. And don't forget, there's a Bitcoin-only playlist here for those who are only interested in Bitcoin stuff. You will find it as well. Adam Q. The Australians are awake. Awesome. Let's get into the gold, the good charts. First of all, a couple of my favorites. This is the top and bottom indicator. And Crypto Last Outpost, thank you as well for coming. And again, the mods in the chat. The top and bottom indicator, which we built during the bear, was to make sure we don't miss the top. And the key here is, despite Bitcoin being at $68,004, the top and bottom indicator is nowhere near frothy, which is really good news. That means we have a lot more upside to go, and we are not the only ones that see that as well. Let's look at another quick chart here. This is Bitcoin. It's heading to level 6 in the ATH model. The 200 daily moving average was smoked. We stuck that behind us a couple of days ago. Chart's looking bullish. Trend is very much up. Buy signals galore all over the place. We are looking good for October. We've been bullish for October anyway. We got off to a bit of a bumpy start, but that's always the first half of October. Second half is when things kick off. Now, let's look at James Van Straten. CME Futures hit an all-time high. This is the open interest on CME. As I mentioned, this is why the big institutions are looking for more exposure to Bitcoin. And over the 5-day trading period, you can see from this chart, was the third largest increase ever. And now we are at an all-time high. The other two times that this happened, if you look, you see June 2023, that was BlackRock filing for the ETF. And we knew they were going to get approved. And October 2023, that was front-running the ETF. The big money, the smart money, know what they are doing. This is a key indicator that we are going higher. Brian Baggs, thank you for coming. Both times this happened in the past, in the last year or so, we gapped higher. And we expect the same thing to happen now. New all-time highs are incoming. Again, 68K to 73K is not a big stretch. We can almost reach it. Reach up, everybody. Touch that all-time high, because we're going there. And I tweeted this last night just for giggles. This was the crazy flow, 371 million into the ETFs yesterday, after 550 million the day before, and a big chunk the day before that. But the ETH ETF drained another 13 million. Of course, I know Grayscale is bleeding out, but there's not much happening on the ETH ETF, to be honest. I know the ETH maxis will tell you there is, but no, there's not. Anyway, this is an important thing. You know, more than halfway through a bull run, people are all buying Bitcoin. So we'll see. Well, it's a Bitcoin only video. So let's talk about Bitcoin some more. Let's talk about the second half of October as well. This is from Coinglass, a very simple little chart, but it shows you we're up over 8% in the first half of October. But if you include all of history, the gainers in the second half, i.e. from today to the end of the month, the 31st, are double, ladies and gentlemen. Double. Thank you, Zena, for coming. So, again, if history repeats, and it often rhymes, the second half, things are going to kick off. So seatbelts on, please, everybody. Also, Bitcoin is above the short-term holder realized price. Woohoo! It's rare it falls below that in a bull market, but here we are above it. Matt P. Shifty 500. Love it. You can see the yellow line is the short-term holder realized price. These are people that hold Bitcoin under 155 days. They are now back above their average price, which means they're in profit, which means they're bullish. And it also means they're very much less inclined to sell. So this is good from Bitcoin Magazine Pro. Now, let's check in on Marty Party. His Wyckoff target says 84,000 by December. We have 19 days to the election. He's got the election listed here. 4th of November. I thought it was the 5th. I could be wrong. Anyway, it's the 5th, I think. Maybe the 4th. Either way, the results are in 5th or 6th. And we don't have many days to go. And historically, all markets pump in an election year into the election. Stock markets and crypto markets. Although the sample size of crypto market election years is very small, but we'll see. Normally, there is a very high correlation between, say, NASDAQ and Bitcoin. So we expect NASDAQ to go up. And if that's the case, Bitcoin will go up too. And it's not just Marty that thinks this. Standard Chartered see a 12% upside in the next 20 days, taking us to 74,000. That's higher than Marty's 84. No, that's lower than Marty's 84. But 2 4s, 10K difference. Either way, a lot of chatter about a lot of bullishness into the election and beyond. I think the big money won't really begin to arrive until we have certainty around what's going to happen. But if the numbers tell us a certain picture ahead of time, we could get a little bit of front running, and I'll be watching that myself and ready to trade it too. Let's look at one other thing too, just to check in on where we are. We did have that 8-month of chop consolidation. That drove people to the edge of the cliff. People were so depressed last month. And Rectember was positive. That's how bullish things are. But if we look at these monthly candles, again, this is ATR model on the monthly. You can see since the beginning of the year, tiny January, huge February, and then March, April, May, June, July, August, September, flat or down. You can put a spike through all of these things like a skewer you put on the grill. And look at that big green hammer with the big buy signal for October. Again, looking good. This hammer should hopefully drive us up and break us out of this chop consolidation. is what I reckon. Remember as well, we had the huge run early on with the ETFs. Massive pump. So we ran further than expected, earlier than expected. That's why we had the chop consolidation for a long time. That's why we hit an all-time high before the halving. That's why this time was a little bit different. All impacted by the ETFs. Speaking of those ETFs, let's jump in and look at some crazy numbers. The ETFs took in $1.2 billion in 3 days. Massive buys. We had Fidelity pull in 117 million and 240 million and 35 million. We had BlackRock pull in 80 million and 290 million all in 2 days. And we even had Bitwise pull in 130 million, ARK 180 million. Big money over the last 3 days is coming in. Very large. Let's look at this in terms of BlackRock is back. The biggest day since early July 2024. BlackRock is the red spike, and they are doing big things in a very short window of time. Let's break that down a little bit further. By the way, a big impact over this whole ETF thing was the bleed out of Grayscale. That bleed out has more or less stopped right now. But what has not stopped is the buying by the other ETFs. So the question is, where are they going to get their coinage from when the OTC desks are empty? We shall see. These are the 3 big days. In another chart, big spikes, boom, 254 million, 551 million, and 371 million. Bang, bang, bang. It's rare we get 3 big ones in a row. We haven't had that literally since March maybe. And then everything drove off. But it's even more bizarre is the crazy amount of Bitcoin that are consumed in 3 days. It's bonkers. 18,000 Bitcoin gobbled up by 9 ETFs in 3 days. 18,000. Remember, daily issuance is only 450. Where are the coins going to come from, everybody? That's the question I've had since day one. We'll see. We'll see what's going to happen in Q4. Again, rates are coming down. 7 trillion on the sidelines. Going to be looking for a home in risk assets. Schwab survey said people are as much interested in Bitcoin ETFs as they are in stocks. Think about that for a second. They're asking all of their customers, all the Ameritrade, Schwab customers, what are you going to buy? And they say, well, I'm interested in stocks and Bitcoin ETFs. That is beyond huge. 7 trillion, we'll have to find a home. And the Bitcoin and crypto market isn't big enough to absorb all of that. But anyway, we shall see where this all goes. And at this rate, I believe if this rate continues, in 5 days, the Bitcoin ETFs could have 1 million Bitcoin in their bags. It's currently at 968,000 Bitcoin is the total number of on-chain holdings from TABI, who tracks this for us. And he's awesome, by the way. But let's look at another statistic. And again, I haven't showed this in a while, but I calculate the average consumption per day by the ETFs. And this is kind of crazy. Here are the big 9. Grayscale's not there because they had a net dumpage, so it screws the chart, so I just cut them off. But Fidelity are sucking in 1,138 Bitcoin a day on average. Remember, daily issuance is only 450. They're doing nearly 3 times that. BlackRock, 1,900 a day on average Bitcoin. Where is it going to come from? Bitwise, 221. ARK, 282. BTCO, 64. And the rest are crumbs. HODL, 55. But it's substantial. But the question is, look at the size of Fidelity and BlackRock. Add those two together, you have over 3,000 Bitcoin a day being sucked in by 2 ETFs. 3,000 Bitcoin a day since January 11th of this year. That is nothing short of amazing. Will it continue? I think so. I think it's only going to accelerate, actually. So with that, everybody, hope you hit the like and subscribe. Thank you all for coming. Thank you, Angle Blackson, and Dial Up Dan and Sean Donnelly, Clint, Hampton Wick, all the usual gang here. So good to see everybody. Thank you all for coming. Hope you like the quick show. Things are looking good for Uptober. See you all tomorrow. Bye-bye.